What's up everyone, my name is Anthony and in this video I'm going to be doing a broader market analysis of the S&P 500 as well as the Nasdaq. And then I'll be going into some specific stock picks that will correlate with the recent market conditions and what I see happening over the next couple days or so. So heads up for this video, I'm going to be going pretty in-depth into the technical analysis on a very small time frame. So I hope this video will be informative not only to teach you how to trade the market but also what to expect over the next few days or so. So in terms of the S&P 500, which I'm going to be looking at the SPY ETF over here, I'm going to take away show you all this technical analysis right here and zoom out on the broader picture. So I know there's a lot of stuff written on the chart, so I'm just going to pinpoint exactly what we're looking at right now. So just in terms of the broader wave count, we have a 1, 2, 3, 4, 5. So we're targeting these nested fifth waves upwards, and we're just basically trading this fifth wave. And if I keep zooming in on a lower time frame, so I'm going to just jump down to the 15-minute time frame, we can see that we've had a lot of impulse structure. So we have a 1 up, a 2 down, and then a 3 up, and then this whole chunk. So let me take away all this. So this whole chunk up here, up and down motion, up and down, and choppiness was all part of a wave 4 complex correction. So pretty much just as a W, X, Y to form a W wave. So a W, X, and then a Y. I went in the previous video to talk about what exactly this means and how you can dissect this. But for this video, just pretty much understand that this whole thing is a wave 4, and now we've finished that corrective state, and now we've confirmed that we're in a wave 5 uptrend. And so basically, the markets are very bullish at the moment, and I'm going to show you exactly the analysis behind that. So now if we zoom into the price action over the past few days or so, this is where we finished the fourth wave and where we started the impulse structure. So actually, I'm going to zoom in heavily to this area. And today, you notice that we had a lot of upside to the markets, and we were definitely trading this in the Discord, and we made some really good profits off some call options on SPY, and I signaled those, so be sure to join the Discord if you haven't done so already. I'm looking to post a lot of plays on the market over the next couple of days or so, and these are very high probability chance of working, because since we're in a fifth wave and we've confirmed this, I'm very confident about the current market conditions. Because I've traded fifth waves many times, and these are one of the most predictive, easily to predict structures out of all of them, because you've already confirmed that we've started this impulse structure after this very complex set of corrections, and basically you don't want to be trading any of this choppiness over here. And now that we've started this uptrend, we know that we're bullish now just because we've confirmed this with a 5-wave structure. So I'm going to show you exactly why I say this. So we start at the bottom of here. So this is the finishing, the final completion of the corrective fourth wave. So we have a wave 1 up, a wave 2 down, and then a wave 3 up. So if we look at this point right here, at this time in the markets, I wasn't sure whether we were going to come down and fall down here and have a failed impulse wave, which would indicate that our complex correction has still not yet completed. But since we got this final push upwards for a wave 5, as you can see over here. So we pushed upwards for a wave 5. That tells me that we have enough bullish momentum to actually start a new uptrend and an impulsive structure. And we got exactly that. So I was playing calls here, and we bought in on some downside over here to cash in on this wave 3 upwards. So in terms of this mini correction right here, we have a wave 2 forming, and this formed a simple ABC structure. And I can dissect what exactly the structure looks like, and I'm going to go down to the 1-minute time frame. So this video is going to be very detail-oriented, and I hope this will teach you how to basically day trade, and essentially using Elliott Wave Theory, which is not very easy, but you can do it. And this is what I've been doing for the markets and how I've been creating the Discord signals. So let's start at the bottom here. So we have a wave 1 over here, and generally wave 1s after a corrective period are pretty choppy. So this looks really well in accordance with our expected structure. So we can see basically like a 1, 2, and then a 3 up here, and then we have this 4 kind of choppiness consolidation, and then a push upwards for the fifth wave. And then we have this flat correction over here. So an ABC, ABC, and then a C wave downwards to finish off the second wave. And then we jumped right into the third wave. So we have a 1, 2, 3, 4 upwards, this kind of consolidation, congestion pattern up for the fifth wave. And then we corrected for the fourth wave. And you can, if we zoom in further on here, let's do this. So we have an A, B, C clearly forming. And at this point, I wasn't sure whether the fourth wave would end here, but we confirmed that this was the end of the fourth wave because we had something called an ending diagonal to finish off the fifth wave. And I can subdivide exactly what this is. So we have over here a 1, 2, 3, 4, 5. And I know that according to wave theory, you can't have wave 4 cross into wave 1. But when you have something called an ending diagonal, where you end up doing this, so you can form trend lines along these bottom ranges. So actually, I'm going to connect the wave 1 and the wave 3-ish. So if you can form some kind of connective trend line like this, you're basically in an ending diagonal. This is very typical of an ending diagonal pattern. You bounce back and forth between trend lines. You can even gap up above it and then fall for the correction afterwards. But yeah, we got an ending diagonal for the fifth wave, and that confirms that we've officially started a bullish impulsive wave structure. Because if we're in a corrective sequence still, we would not be able to push upwards for a fifth wave. Because as you know, corrective sequences don't take on fifth waves in an uptrend, or a 5-wave structure. So we wouldn't have this fifth wave up here. So once we confirmed that we were in a bullish impulsive structure, I was willing to trade many contracts, and I did signal this in my Discord that I was going to go pretty heavily leveraged into some calls once we confirmed the bullishness. So I'm going to get rid of all those structures, and just keep in mind that we are on the minute chart. So this is very detail oriented, and this is like all this price action is over the course of a few hours or so. So after we finished this wave 1 upwards, we came down for the wave 2 in an ABC structure. And as you know, ABC corrections subdivide into 5-wave structures, then 3-wave for the B wave, and then 5-wave downs for the C wave. So we can actually see that right here. We see we have a 5-wave structure to the downside. So we can kind of roughly subdivide a 1, 2, 3, 4, 5, and I'll make that really clear. So we have a 1, 2, 3, 4, 5 to finish off the A wave. And then I'm going to delete this because it's going to get a little bit too much information on the chart. And then we'll have an ABC for the B wave. So just kind of like some regular ABC structure. There's no clear impulsive structure to this, which is why you put it as a B wave. And now for the C wave, we have a very clear impulsive structure to form the last of this downside. So we can just simply draw it as a 1, 2, 3, 4, 5, just like the A wave. So that's where our second wave finished. And then we started coming up for the third wave. And I've already subdivided some of this upside move. And we can basically see that this wave 1 also subdivides into an impulsive structure. So we see a 1, 2, 3, 4, 5 to the upside to finish off the wave 1. And you can very clearly see that wave 4 congestion consolidation area. This looks like exactly what you expect from wave 4. So this confirms that this is an impulsive structure upwards. And then we corrected for the second wave down in what looks like an expanded flat. So just A, B, C. And if you really wanted, you could further subdivide that A, B, C. So actually, I'm going to do that because I want this video to be extremely informative. So in this expanded flat correction, so we're going over every single pattern in this Elliott wave structure. And this is why I really like trading fifth waves, because the way it pans out is it follows wave theory very perfectly. You can clearly see structures, and this is why I have very high confidence that these trades will work. So we basically see, actually in this case, we see kind of a 1, 2, 3, 4, 5. So this could be more of a zigzag structure. So a 1, 2, 3, 4, 5 for the A wave, ABC, a very clear ABC for the B wave, and then for the C wave down, we have a 1, 2, 3, 4, 5, which looks like to be another diagonal forming. And I can draw those trend lines right here. So kind of a diagonal. And this is just what I said previously, where, actually I'm going to go back to that area. So in this fourth wave up here, after we finished this fourth wave, we had a diagonal up here, which just means towards the end of an impulsive structure, you kind of see the wave structure not really respecting the common rules where wave 4s cross over here into wave 1 territory. So that's just an example of what you can do. So once we finish this second wave down, so let me get rid of all this information here. So we finished the second wave down, and this is your buy signal. This is where you really want to go in because you're very clearly finishing this corrective sequence. You can clearly subdivide it, see that it's done, and you've confirmed that you're in a bullish structure. So now we pushed upwards for the third wave, as expected, and this is what I really wanted to trade. I was really trying to trade this. So we pushed up for the third wave, easy gap up, and then this fourth wave congestion right here, it looks perfect, looks like a fourth wave congestion, and this is where I signaled on the Discord to really get into calls, like full leverage, go all out. This is very high chance of working. So for those in the Discord, if you ever see me buying a lot of contracts, that means I'm extremely confident about the play. And I think for every single play that I've signaled that has 10 or more contracts, it's always worked out. So this is why you can use wave theory to be extremely confident about your trades. So here we rode this whole wave upwards, and I did signal to kind of take profits around these zones, so just anywhere in here, because we would expect some downside to be coming because we finished this impulsive wave structure to the upside. So we finished this fifth wave up, so a 3-4, just kind of this fifth wave to the upside, and now it looks like we're correcting for the second wave. So we're focusing on the second wave, and right now I'm actually out of all my positions, and I did signal to, if you want to take profits, that's a good idea. You can keep holding because this corrective sequence should be finished by some more upside up here for the third wave. And so we expect to see an A, B, C forming for the second wave. So we might, gap up a little bit in pre-market and then head downwards for a little bit, run into these buy zones. I'm going to be adding maybe 20 to 30 SPY calls at this area to ride the third wave up. This is huge upside, and you can guarantee that I'll be posting this in the Discord. So that's, I'm sorry, that was really long. That was just a huge summary of the minute-by-minute details of the action we've seen recently. And this is just to emphasize how easy it is to predict fifth waves in a market. This is my specialty. So for SPY, now we're going to do some price targets. So I already drew some of them here. I'm going to actually redraw them so that you can see what I'm doing. So let's get rid of all of these. So I'm going to first draw the third wave predictions, so the third wave price predictions. So we start at the bottom here. So this is basically where we started this impulsive structure to the upside. So you click here, drag it up to the top of wave 1, then down to the bottom of wave 2, and we get some Fibonacci extension zones. So I expect SPY to basically have some upside up to these levels. To the 1.618, I would say it's a little bit hopeful, so I'm going to target these for now. Definitely 427 is on the list, and I'm going to mark this as the top of the third wave. And we should expect this forming impulsive structure to gravitate towards these levels. And as you can see, if you get in here and you buy calls and you ride the whole 10-point, 12-point wave to the upside, that's a lot of money to be made. Because we're trading, in my Discord, I'm signaling SPY calls that are expiring very soon. So they're cheap, but if you're right, it's very highly profitable. And I think the calls that I pinged were up 20, 30, 40% in a matter of a half an hour or so. So these are really profitable. I'm really excited to be getting in on this wave 2 dip. And obviously if things change, so say for example, some really bad news comes out and we just for some reason plunge downwards and we invalidate the structure, I will definitely be updating that in the Discord. And that's an easy stop loss. But for now, I would say this is a very high probability chance of working out because we've confirmed this bullish wave structure. So basically, we're targeting these areas for the third wave. And in terms of where the stopping area for this correction is, all we do is take a Fibonacci retracement level. So we started at the bottom of this wave 2, and we drag it up to here. So this is essentially just targeting that wave 1. We're just retracing the wave 1. So we want to target these areas. So actually, we see we've already reacted to the 0.236 level. So I expect to bounce maybe a slight gap up and then coming back down to these levels. So I really like the 0.382, the 0.5. I don't think we'll get down to the 0.5, but who knows, maybe. Basically, anywhere in here is a really good buy zone. So that would give you some upside. And the good thing about options is you don't have to catch the bottom. You can just buy along this wave down. And you can even hold the calls that we got in earlier, and it'll still be profitable. So yeah, that's the complete technical breakdown of SPY minute by minute. I hope that helped you not only get a sense of what the price action should be over the next couple of days or so, but also how you can do this yourself, because this is exactly what you can do on a minute chart. You can dissect the wave structure very clearly. So in terms of that, I had some requests to also do the triple Qs. So this is a different story on the other hand. So it's a little bit more complicated. So I won't go into the minute by minute details, but I'll give you a brief overview of the wave structure. So in terms of the Nasdaq, we see a 1, 2, 3, 4, 5 formation, kind of just like the SPY. And previously, I thought that we might be topping around here. It wasn't really that sure, but we did get some kind of topping pattern, and we haven't really broken the all-time highs. But if I zoom in on the structure, we finished the third wave up here. We came for an expanded flat, so A, B, C, and then we came upwards for a failed impulse wave for the X wave, and then came down for an ABC for the Y wave. So basically we had an ABC, ABC, and then an ABC. And this just means we're in a complex correction, and this is why you don't really want to trade this. So a W, X, Y, and this whole thing could be considered the fourth wave, just like the S&P 500, and then we're coming up for the fifth wave. In terms of trading the Nasdaq, so the triple Qs over SPY, I would recommend sticking to SPY because this is very clearly more bullish. You can just tell by the wave structure, we have a very clear formation of some impulse waves, whereas for the triple Qs, we seem to be not really confirming that we're exiting this complex correction. So what could happen is that we form another XZ correction. So we do XYZ and then XZ. There's no way to know right now. We haven't confirmed anything. Although, because the S&P 500 is so bullish, in my opinion, the Nasdaq will naturally follow in its path. But I think the upside is limited on this on the tech sector. So I would definitely avoid trading calls on triple Q if you can trade the SPY. And in terms of dissecting this recent wave behavior, we see that we broke out of the trend lines that were forming the Y wave, which is the fourth wave finishing right here. So we kind of see like a 1, 2, 3 structure maybe forming. It's not as clear though, and we have very harsh retracements. So I'm going to zoom in on that. So let's go on to the 5-minute chart. We see that every time we push up, like for example here, and we correct, we have a really harsh retracement. So these are going down, correcting most of the upside, which is very skeptical. You don't want to trade that because if you buy at the wrong time and you get caught in this huge downfall, you're not going to make much money. Whereas for the SPY, you see that the retracements are very light. They're not very aggressive. For example, just the wave 2 over here was only down to the 50% zone. Whereas for the triple Qs, this was like almost retracing the whole thing. So I would recommend staying away from the Qs and mainly focusing on SPY. And in terms of the wave count, we could either be in a fifth wave to the upside or an X wave for the complex correction. So there should be some upside, but overall, it's not as bullish as you would expect for the S&P 500. And to confirm this, I'm going to be going over some specific stock picks. So I'm going to compare and contrast Disney and Apple. So overall, we see Disney forming, we finished the impulsive structure to the upside, so a 1, 2, 3, 4, 5. And this is, I believe, was the top-ish area. And now we're forming an A, B, C correction. And I know you might hear correction and think that this is bearish, but we've actually, it appears that we're entering the bullish phase of the corrective period. And this is known as a B wave. So this would, I've been signaling just in my watch list that Disney looks like a possible pick if you don't want to trade the market. But yeah, Disney looks like to be forming an ABC. So we're targeting the B wave upwards, and we could just see some kind of 3-wave move to the upside, and then we come crashing down for the C wave. So no matter what you do, I think that you could target Disney as a possible going long play. And I want to compare this to Apple. So as you know, as the people know in the Discord, I've loved trading Apple previously. We traded Apple all the way from the bottom of A wave in the Discord all the way up to the top of the B wave. So we traded this whole upside move for like 300%, 400% gains on options. And then we rode the wave down back for puts for more profit. So we essentially just squeezed money out of Apple. So we rode it for the upside, then down for the C wave for puts. And Disney, you can see, is a little bit delayed. Whereas Apple, we've already finished this ABC correction. Disney appears that we're just about forming it. So you can kind of compare and contrast that for yourself on your chart. So we can see ABC for Apple. And right now, we're just in that middle of forming that B wave. We're just starting to form that B wave to the upside. So you can definitely target this for some calls if you don't want to trade the market. But for me, Disney is bullish just temporarily. And this should go very well along with the bullishness in SPY. It makes sense. If we're bullish on the S&P 500 and Disney is in the S&P 500, it makes sense that Disney will go up. And so it agrees with what we're saying about the markets. In terms of Apple, I would not trade this because we finished the ABC correction. I don't really know. Honestly, I don't know what it's doing anymore. After an ABC correction, and we've already finished this topping period right here, I have no confidence to say what it's going to do now. It could come to form a triangle pattern. So we could see, let me bring that up. So we could form some kind of A, B, C, D, E. So there could be some upside. Or we could just go in A, B, C, and then just maybe kind of gravitate here for a little bit. So we could kind of stay here and then just fall down to some of these key support levels. There's no way to know right now. We need to wait for price action. So I'm not recommending doing anything with Apple. If you're in a position, you can probably hold on to it just because the markets are bullish. But overall, I would not touch this. And I'm not planning on touching this and signaling anything for Apple. We've already taken our fair share of money from the stock, so I think we'll leave it at that. And finally, I just wanted to do an overview of Bitcoin. So Bitcoin also seems to be following a very predictable pattern. So right now we're getting pretty lucky because all these stocks are doing what we expect in terms of Elliott wave theory. So let's zoom out to the very beginning of Bitcoin history. So we have the wave 1 up, the wave 2 down, harsh retracement, it looks like wave 2, and then we form this extended wave 3. So in terms of the wave 3, let's subdivide it. So we have a 1, 2, harsh retracement for the wave 2, then push up for the wave 3, then a 4 down, and then we have, like I said previously, an ending diagonal 5th wave. So we saw those in the market as well, and I kind of explained what those are. We see this structure in Bitcoin as well, and it's very obvious. So I'm gonna actually, 5 minutes too short. Let me go down to the 1 hour for you. So we bounce back and forth between two trend lines. So like 1, 2, 3, 4, 5, and then we finished this third wave to the upside right here. And now we came down for an A, B, C correction. So I think we actually bottomed out on Bitcoin temporarily for now. So this is the bottom of the 4th wave. And it looks like we're pushing upwards for a 5th wave right over here. So let me show you that, right over here. And I actually haven't done this yet. Let me draw some basic extension levels to see where we might end up on Bitcoin for the upside. So I'll do this right here. I haven't done this yet. Let me show you how to do it. So we simply take the extension, trend-based Fibonacci extension, bottom of wave 1 up to the top of wave 1, then down to the bottom of wave 4, and we can get some pretty key levels. So let's see. So let me make sure I got the bottom right. Let me adjust that to be exactly where the bottom is. And we see some price targets over here. So 61,000, 57,000. So I would say that these are main price targets. And as you can see, we might not even be able to break through the all-time highs. We might double top here. So we might come up and then double top and then fail. And then we come crashing down. So that's what we see for Bitcoin. But overall, right now, it's definitely bullish. We can definitely target some of these very easy levels, and that's with high confidence. Because as I said previously, 5th waves of any uptrend are the easiest to predict. These are very predictable. You have so much confirmation, price confirmation, that you're in a 5th wave. And yeah, so I hope that makes sense to you. And yeah, this video is very long, so I'm sorry about that. But I hope that was somewhat informative. And I hope you can take the examples that I showed you right here and how to dissect a minute-by-minute wave theory into your own charts. So that's just a basic idea of how you do it. And I feel like it's best to show you through real examples and real trades. So looking over the next couple of days, I will be definitely signaling some plays on the market, and you can be sure that I'll be posting those in the Discord. So once again, if you haven't joined, be sure to take a look. Maybe join the Discord if you haven't done so already. And be sure to subscribe to the channel for frequent updates on the market. And I'll be posting as much as I can over the next couple of days to give you a better sense of what to expect and what the markets are doing right now. So that's going to be it for this video. Thank you so much for watching, and I'll see you in the next one.